Welcome, everybody, to our podcast on the impacts to insurance products due to the pandemic. I had a client request that I do a short video on this, so here it is. A few months later, and I've invited Steve Fooks, who is our advanced case consultant from Canada Life, and I've worked with Steve for well over 10 years. We started working together when we were both at London Life and ClearWealth, and so lots of experience working together. And likely he would have had input on any insurance products you personally hold that we placed on your behalf. So welcome, Steve. Thank you for joining us for this. And I wanted to just get right into it here and ask you, from your perspective, from what you've seen, what are the impacts to insurance products due to the pandemic?
Yeah, certainly. I mean, there's always a concern, and the biggest during a pandemic is always mortality. And due to mortality rates, are you paying out more than you thought? Actually, when we take a look at the numbers from last year, we actually ended up paying out less than what we had thought. And the biggest impact on that was just that with the lockdown, there's less people out and about and less accidents. So there was less money paid out for that, less money played out for flus, because we just didn't have the flu rate same as we've had in the past. And the higher mortality rate for COVID was really seen more in the later ages, the older ages, and people that have had a contract for a long period of time have already paid in those premiums, so the reserves are already high up enough that it's less of a risk. The one thing that was a little higher, and that was just the suicide rate for last year.
Oh, really? Okay. So how about deaths due to too much hand sanitizer? I digress. So,
Yeah, don't ingest it.
okay. So um, now, if so, some clients have been, very financially impacted by the pandemic. It's affected their, the practice or their business or their income. Um, what what are ways that clients can use these policies, these life insurance products with cash values or other products to help their financial situation?
Yeah, for sure. This is one of the reasons why we build these products that have higher early cash values for things like this, like things that we didn't think could happen, that the government tell you that you can't do, you can't open your business anymore. So that's the biggest reason why we do that. And how people can access that is just a simple phone call. If they need to get a hold of money quickly, they can do that. Probably the most popular one, though, is actually using this asset to pledge to a bank or a third party institution and just taking out a collateral loan and accessing the money. And again, it's not just to take for risk if they're not able to run their practice or run their business, but also to take advantage of opportunities that arise, either investing in real estate investments or equity investments. There was a lot of people that tried to be a little creative around in March when markets went down. They figured it was a very good time to
Yeah,
leverage.
yeah, that one would have played out well. So, any going forward from an insurance perspective, from a risk management perspective, what sort of things should clients be expecting from these policies? How it may impact values, so on and so forth, and what can they do to take advantage of any sort of planning opportunities as a result of this pandemic?
Yeah, I would say that there's less. I mean, certainly the insurance company, anytime there's some kind of impact on mortality, they're very concerned about it and they're looking into it and definitely looking at it very closely, because these are products that could be around for 60, 70, 80 years, and they're promises for the future. So they, again, still trying to be very, very conservative in how they invest and how they price the products. Um, but one of the biggest impacts going forward is going to be just low interest rates.
Yeah.
And even though the returns on these products are probably a little better than what you could get anyways for a fixed income conservative investment, the insurance companies are always looking at ways that they can actually um, get a better yield without taking a lot of risks. And that's probably a topic for another day because we could go a little
Another day.
deeper into
Yeah.
that.
Well, yeah. So I'm going to leave it there so that we don't run this too long. I want to thank you for joining us. I'd say that the things that I heard from you is that the values within the policies clients have now are safe and sound going forward. Always looking for more yield and how to increase the returns. But if you need access to your cash values, talk to us. Make that, when Steve said, call, just make a phone call. Make that phone call to us. We'll advise you. And then, the last thing going forward, I would say one comment I will say that Steve and I talked about is that, there's a lot of money that's being given out by the governments, and they're going to have, they're going to want to get it back, or some of it. So taxation's likely not going to go in a southerly direction, and because it's going to be high, and these products defer tax for so long, and eventually could defer them completely. I think there's something that clients should continue to look at, and if they can add more to their portfolio, it might be advisable. So, well, thank you very much for coming, and thanks to all of our clients at ClearWealth Advisors. Everybody stay safe and stay healthy.
Perfect. Thanks.